You like?
Hello! Welcome. Happy Sunday evening. It is 6:01 p.m., 6:02-ish. And we're going to dive into some tax info. I did a tax, not I did a class, but I attended a class in California when I was there with a bunch of Amy Colgan and Brian Colgan's team. And I had a blast, and Amy's dad happens to be like the CPA guru of the world, and so I picked his brain. If you were at that class, I'm sorry, I probably dominated the whole thing and asked a million questions. But I wanted to gather as much information as I possibly could to pass it on to all of you and help you this tax season and upcoming tax season. So as people are getting on, I think there's like a little over 30 people that plan to come to this live. If you cannot make it, that's okay. We're gonna, this is being recorded right now through Facebook Live, and then I'll be able to actually repost it in our regular group too, in the pinned post, so you can refer people back to this. Okay. Hi, Nicole. I have Bart's phone right here telling me who's on because I can't, the camera there is just a little too far away. Hi, Cassandra. Okay, so in the event page, I posted two pictures, and it's actually this flyer that I made up, essential oils and tax benefits, and then the back side, the second page, is a tax write-off cheat sheet that I made for you. And I am going to have it in front of me, and this is kind of what we're going to work off of tonight, and I've got some paper over here to take notes, so as you ask questions, I'm actually building a fact sheet, so like frequently asked questions about taxes and maybe digging into the information that's on this sheet a little further. I'm actually going to create a third page that will be basic tax questions. Again, I'm not a CPA or an accountant. I'm just a long-time business owner, and I've just learned through my years of doing business, sometimes the wrong way and sometimes the right way, but I've definitely learned a lot of ways to get tons of write-offs. Last year, even with all of our Young Living income, I was still able to get a $10,000 tax return. And so there are tons and tons of things that you can write off, especially if you have W-2 income. If you're working any kind of job or you're a subcontractor for anyone else and getting 1099, you can write off that income. If you have a spouse, say you're building the business, like I was building the business, but my husband was still working a W-2 income job, I was able to write off the income that he brought in, offset it with my Young Living business. So anyway, I want to share some of that. What kind of inspired this whole like sharing the tax information was actually a story that Amy shared with me a couple weeks ago when I was in California. Her dad helped one of her downline members who purchased a premium starter kit for $160. She signed up one person all year long, and he was able to get her $5,000 back on her tax return as a tax return because she invested and started a business when she bought a premium starter kit. And so that just was super inspiring to me, and I thought, gosh, if more people knew about this, more people would probably sign up at least one person all year long so that they could potentially get all of that money back. So, hi, Amy. Okay, Amy was at that class with me. Amy Garcia, she listened to me ask a million questions. Okay, so you've purchased your own premium starter kit, and what you may not know is that your new kit is going to not only up your financial or your wellness game, but it's also going to up your financial game. And when you sign up as a Young Living member, you're automatically a business entity. You sign up as a sole proprietor with your social security number within the Young Living system, and they generate a member number for you, and you purchase something, and now, ta-da, you are your own business owner. You can make whatever business choices you would like within the constructs of policies and procedures to operate your new Young Living business. A lot of people, I would say 92% of people, according to the income disclosure that Young Living puts out, choose to just be product users, and that's fine. However, you could be missing out on thousands of dollars back every year on your purchases if you would just sign up one person, enroll your mom, your sister, your brother, your cousin, somebody, your best friend, help them get started on their own wellness journey with Young Living, and you could be getting a lot of that money back that you're investing into your health. So essential oils are considered an investment because Young Living requires that you spend 100 PV every month to qualify for all bonuses and commissions owed to you. You can write that off. So you can go through, and Young Living keeps track of all of your orders and all of your receipts all year long. I think they keep them for a few years. I think I have all of my orders from the time I started ordering in May of 2014. They're still in my virtual office. I can go back and look through them. You can also keep your printouts that come in your order boxes if that's your style. I can't stand extra paper, so I usually toss those, and then anytime I need to go track down an order, I'll just go into my virtual office, go under my account, my orders, and they'll be listed there, and I can click into those and I can look at all of that. Now, a lot of people ask, do you write off all of your orders? I personally write off all of my orders, and this is why I do it this way. Because I purchase so much from Young Living for promotions and giveaways and samples, I write off almost all of pretty much my entire ER purchases for the whole year. And if you look at like the tax code, it'll say you can only write off the amount that the company requires you to purchase. This is true. But if you're purchasing extra promotional materials, samples, you're demoing product out, those all count under advertising and promotions, and that's 100% write-offable. So you can do that too. So that's why I write off everything. So when all of those ER points that I'm accruing every month and all those free oils that the company sends me for ordering anyway, those are what I use for my own personal use. And everything else that I purchase from Young Living, I use for business purposes. So that's how I get to be able to write off all of my stuff. And that really saves you tons and tons of money. So as I'm going through these things tonight and what you can write off and why, and some examples, please feel free to ask me questions. I'm going to be taking some notes from you just so that anything that pops up that's not answered on this sheet, I can answer it a little bit more fully in the facts page that I'm developing. So, hi Tammy. Hi Casey. Okay, so you want to keep all your receipts. Receipts are often lined with BPA. That's what makes the receipt work in the machines where they like use heat to transfer the information from their computer screen to an actual piece of paper. It's not typically ink that's laid down. It's like a heat process. That heat process uses BPA, which is really toxic to your body. So I try not to keep receipts and hang on to them. Inevitably, I have piles of them. Try to touch them as little as possible. You can download an app, TaxBot, Young Living. If you go to youngliving.com in your virtual office, you can go to member resources, and then under business tools, you can sign up for a discounted version of TaxBot. I think it's like $8 a month or something, really affordable. And you can scan your receipts. You can also get a scan app on your phone. There's tons of them in the App Store, and you can scan it and send it to like a free Dropbox file and keep all of your receipts in a Dropbox file. And then if you have a CPA or somebody do your tax at the end of the year, if it's not you, you can just send them that file and then everything's there. Super easy. Really organized that way. Okay, so you can write off tons and tons of things you might not even realize that you can write off. So if you flip over to that second page, your write-off cheat sheet, first thing you can write off is your starter kit. That is your investment into your business. That's your startup cost. You can write off all of your startup cost. So that $160 tax and everything, you can write that purchase off. You can write off all of your advertising and promotions. So this is if you run an online or a print ad, flyers, business cards, anything like that. All of the flyers at your classes, if you have a little, invite that you send out, thank you cards that you write out, anything that you do to promote your business in print or online form, you can write those off. You can also write off your website and your design expenses. So if you paid somebody to build your website or you have a website service that you use, you can't write off your time that you've invested in building your website, but you can write off the expense of building it. So if you had to download photos, like a stock photography, graphics, you purchase graphics to use either through print or online on Facebook, anything like that, you can write those off. You can write off your hosting, you can write off your domain name, you can write off your, if you subscribe to My Oily Site or one of those website services out there, you can write that subscription fee off. All of your giveaways and promotions, keep track of things that you give away. When you give an oil out, you give a sample out, anything like that, assign a monetary value to it and write it down. If you don't have, line item on a receipt, sometimes I will, take 20, 30 drops out of a bottle of Panaway. I'm going to write that down, keep track, and you can just have like maybe a clipboard with a lined piece of notebook paper or a spreadsheet, and you can just write down the person's name and what you gave to them and assign the monetary value, what it would cost you to purchase that, to give that to somebody. Include your shipping too. And any kind of like thank you card or anything that you printed to go in there, plus the shipping envelope and all that stuff, okay? Product demos. This is really, really important. If you are hosting a class and you are purchasing food, that food is not 100% right. You can't write 100% off, except if you put a drop of oil into it, like you make some peppermint brownies, or you make some lime and salt popcorn, or you make some lavender lemonade. If you're putting your product into the food, it's now considered a product demonstration, and that is 100% claimable, and you can write that off entirely. So it doesn't fall under meals and entertainment in that case. It falls under product demonstration, and that falls under advertising and promotion. Cassandra, biz cards. Yes, business cards fall under promotional printing. Anything that you hand out, give out to promote your business. If you took out an ad in a local paper, if you scattered your business cards around the parking lot at a grocery store, handed out flyers, pinned up flyers on, local bulletin boards, community boards, stuff like that, all that you produced is claimable. Hi, Shannon. Glad you're here. Okay. So next, let's see. Okay, in product samples. So just add your oils to all of your stuff that you're putting out for classes. One, it's great because everyone that comes is going to get to try something. So make a batch of thieves apples, make some lavender lemonade, some fun popcorn or something. Get creative. Put at least one drop of oil into it. Now you can claim that as a product demonstration. And it shows everyone that you can adjust Young Living oils safely, which is awesome too. So product samples, of course, mention those. Auto expenses and mileage. You can write off your car payments, especially if you have a lease. You can write off 100% of your lease, why a lot of business people will have leased vehicles, because you can write 100% of that car payment off every month. Insurance, gas, parking and tolls, registration fees, and repairs. So if you're using your car for business, keep track of those receipts. If you had to put new tires on, you had to get an oil change, you're driving it all around town, do classes, meet up with people to do coffee date, you're driving down to the local coffee shop to work on business stuff, whatever it is, if it's involved in operating your business day to day, you can keep track of that and write those car expenses off. Bank fees and PayPal too. Don't forget about PayPal. PayPal will 1099 you at the end of the year if people are paying you through PayPal for things. Just keep that in mind. So you will need to make sure you keep track of all your PayPal stuff. It kind of keeps track of itself for you. So just make sure that you're looking at that when you're doing your taxes at the end of the year. I have a website that does graphics and stuff for oil entrepreneurs, and so I do a lot of business through PayPal every year, so I get a nice fat $10.99 from them, which is awesome. So keep track of all the fees that they charge you. If you didn't send money, if someone didn't send money to your friends and family and you had to pay a fee to collect that money from them, you can write off all of those fees. You can write off all of your ATM fees if you had to pull money out, any of your monthly or annual service fees on your bank account. A lot of bank accounts now, if you don't keep like a certain amount of money in there every month, they'll charge you like $10 or something. all those fees you can write off. Any kind of transaction fees, whatever it costs you to make a transaction for your business, you can write that off. Okay, donations. This is a big one. Donations are a tricky thing. They have to be done through a 501c3 to be considered a tax benefiting write-off. So this is not like where you're taking a bag of clothes down to your local Salvation Army and dropping them off and they give you a receipt. That you can write off too, but it's usually very, very minimal. Most people don't even bother. But if you're giving money, if you're rounding up every single order through the Young Living Foundation, they send you, you can actually log into your YLF account, and then Young Living also sends you at the end of the year, they send you a tax form that is for all of the donations that you made through the Young Living Foundation, and let you know exactly what you've spent. And so you can write off all of that. If you went to convention and you bought like the raffle tickets, to win that motorcycle that they were giving away or anything like that, or you bought a hat through the foundation. What was that?
That motorcycle was supposed to be mine.
Bart says that motorcycle was supposed to be his. Anyway, a friend of ours won it, which is pretty cool. But anyway, so anything that you did, you bought, some of their jewelry that they might have had for sale that benefited the foundation. All those things are a write-off. So YLF is a great one because it is a 501c3. They keep track of every single cent and dollar for you and let you know at the end of the year. If you are going to donate to other organizations, just make sure that they are a 501c3. That means then you can claim that write-off. If they're not, if someone is doing a Kickstarter campaign, they're raising money for their sick aunt, they're, trying to, they were ill and needed to collect money to live on, or whatever kind of donation that you gave throughout the year, those are not write-off expenses for you because they're not done through a 501c3. So just keep that in mind. Okay, dues and subscriptions. Yeah, this is Brandy. To answer your question, yes, Young Living donations 100% count. Every single penny you give to Young Living Foundation counts. You can write that off against the income that you make. Hi, Steve. How are you tonight? Okay, Cassandra, if we are over a certain amount, will PayPal 1099 you? Yes, I think it's over $600 in a calendar year of income, they will 1099 you, and they'll email you and say, hey, your 1099 is ready. That's what they did for me this year. So I didn't get one last year, so I must not have done enough business through PayPal last year. I'm not sure, but this year for sure they did send me an email that said, congrats, your 1099 is ready. So I made sure to print that out and include that. So if a company 1099s you, they send one copy to the IRS and you get a copy. So you want to make sure you claim that income because the IRS already knows about it. And if you do all your taxes and you don't include that 1099, then the IRS will come back to you and say, hey, so-and-so said that they paid you this much money and you didn't claim it. You now need to pay us taxes on this amount. It happens. It's not the end of the world. They'll just send you a nice little letter that says, hey, you still owe us some more money. So it's better to just claim it all. Just do it all up front if you can, if you know about it. So, hi, Debbie. So glad you guys are here. Okay. For those who are just coming in, we're going over that flyer that I posted the front and back. And then please feel free to ask questions. I'm going to go through and make notes because I'm going to be adding a fact page to this as well for frequently asked questions that are not clearly defined on this. There's only so many things you can fit on one side of the paper, right? Okay, so going back here. Okay, dues and subscriptions. So any kind of memberships that you belong to, if you are, in the Oily IPA group or you are on Happy Hangout, if you have no idea what I'm talking about, ask me about this later. There are groups that other like Diamonds, Crown Diamonds and stuff have put together that give extra information because they're training other teams outside of their own, and so they'll often charge a subscription to or a membership to their Facebook group. If you're participating in any of those that are giving you information that are going to help you grow your business, like class scripts or graphics or anything like that, that you can claim. You can also claim things like Oily tools. If you are actively building a business and you are at least a senior star, I would highly recommend you download Oily Tools from your app store and pay. I can give you a month free if you've never had it before, or your nearest upline person if there's somewhere between me and them. Me and you, there's someone, they can gift you Oily Tools for a month and try it out. It's super awesome. It tells you exactly how much money you're going to make down to the penny. You can switch between the different ranks to see if you rank up, how much more you're going to make based on your current OGV volume. You can see all of the people in your downline, all their contact information. You can text and email from it. You can see a bunch of different statistics. It's just a really super cool app that was developed by a Crown Diamond, who is like an app making genius. And he's developed several apps, and that's just one of my favorites. Young Living recently purchased it from this gentleman, and so they run it now, so all of the information stays really super secure, so no one else can have access to your account information. TaxBot, like I mentioned, it's like $8 a month-ish. I think if you go through the Young Living sign-up process through the virtual office, go to Member Resources, Business Tools, there should be a TaxBot link that you can click on. This is super handy too, because when you're riding in your car and you've got that app open, it will track all of your miles and log them for you. Cool. Brandy, Cassandra says, Brandy should have sent you an email with our donations exact if you've been rounding up or not. Yes. Okay, sorry. Yeah, you were answering a question. So yeah, Young Living will send you a document letting you know. What's the name of that app? Nicole, it's called Oily Tools. Oily Tools, Tools. It is fantastic. Hi, Crystal. How's the baby? Hope you're feeling better. Yes, Debbie says she loves TaxBot. It's awesome. I am dubbing Bart the TaxBot operator of this relationship.
Oh, goody.
I like to build businesses. I don't particularly love to track them all year long, but I do love taxes. For some reason, I love figuring out how to not pay as much at the end of the year. That thrills me. It's like a chess game. Wyatt's kicking you, Crystal. Good. That's good news. You want baby to be in there kicking around. Okay, Project Broadcast, another subscription. I subscribe to Project Broadcast. I absolutely love this app. This is how you've been receiving these like weird little texts from me that come from probably a number you might not recognize. This is my texting app that I can literally download from Oily Tools, that other app. Same guy developed this one. I can download, say, everyone that's in my local area based on zip codes, and I can put that into Project Broadcast, and I can text everybody in my local area and say, hey, we have a class tonight, just wanted to send you a friendly reminder because we're all busy and sometimes we forget. Great way to do that. Great way to send out promotion reminders. Great way to send out, hey, you're going to go inactive here soon. If you were one of the receivers of my text, I think I sent like everyone in my downline a text saying that they were going to go inactive several months ago. Big mistake. Accidentally hit the wrong button in Project Broadcast. Don't name your tags similar names. That's all I can say. Once you're in though, you know what I'm talking about. But it's a fantastic app that you can really manage your business well, especially if you have, you are, I would say probably executive and above. You probably have enough members. You're probably, getting 50 or more members. Then that app might be worth it. I think it's $10 a month at the lowest level, and you get like 500 texts or something, which if you've ever used a texting app before, that's super cheap because the ones I've had in the past were like hundreds of dollars. It was insane. So super, super handy as your team grows larger. Unless one of you tell me that you have that app and you're managing your own people, then I will continue sending messages out to the whole group based on obviously needs that, order reminders if they're missing their ER, if they're going to miss a, commission check because they didn't place an order or something like that. If you aren't sending those out, then I'm going to send those out just to make sure everybody's taken care of. Okay. Education. You can write off all the books, anything that you purchase. So if you're purchasing books like Taming your dragon because you're wanting to educate yourself on hormones to be able to teach your team how to manage their hormones, health, in a balanced, healthy way using essential oils. You can write off that book purchase. If you're purchasing business books, trainings, anything like that, you can write those off. Any kind of professional development, so self-help books, you're taking an online course, you're getting counseling from somebody that is specifically for business, you can write that off. Any workshop and training, if you're going to Highest Potential Academy or you're going to Diamond Bound events or you're going to any of the other Young Living or offshoot Young Living things done by other leaders, you can write those things off if it is for the benefit of your business or it's educating you. You can write off your tickets to convention, beauty school, and any corporate events. Make sure you just keep track of those. Yes, game plan books count. Absolutely, because they are a business tool and you give those out to your business builders so that they can know how to build their business. Yes. Game plan. Okay, just checking here for any other questions. Doing good. Okay. Any equipment and event rentals. So if you have an event and you don't have enough chairs and you need to go rent chairs, you can rent those chairs, tables, tablecloths. If you had to, get an event space to hold everybody and it costs you money, you can write that off. So anything that helps you put together an event, host an event, things like that. Gifts given. This is something that goes round and round and round in some of the groups on what you can actually claim for gifts given. So say someone signs up for a premium starter kit and you decide you're going to give them a product credit for $25. That's the max that you can gift someone in a calendar year, according to the IRS. So if you're going to give other things, then it needs to go under advertising and promotion. So keep in mind, you can only gift someone $25 worth of whatever you're going to give them. Anything else has to be claimed under advertising and promotions, and you're probably going to have to give it to more, like it's going to be, you're going to run a team-wide or a leg-wide promo or something like that, then you can run that under products and promotions. So Young Living also caps the amount of money, a product credit that you can give to someone for signing up at $25, and they do that for this purpose. You can give more money on an account credit for things outside of signing up. So say for example, I had a husband give me money to put on their wife's account so that they could buy birthday gifts through their Young Living. He didn't know what she wanted, so we put a couple $100s on her account. That's totally fine for those types of things. But if it's specifically meant to incent them to sign up, then it needs to be capped at $25. If you want to do a promotion to give out an EOPR, essential oil pocket reference for those who may not know, oily app, something like that, that can be run under products and promotions. Okie dokie. Cassandra, you need help finding my convention receipt from last year. Yeah. You should be able, if not, you can contact events@youngliving.com and they will have track of your ticket cost, or you can look at your credit card statement or your bank statement too. So, oh yes, Crystal says email search bar convention. Yeah, you can search in through your emails and find it that way too. So usually convention, or if I do registration or something like that, it'll pop up. Okay, couple more things. Home office. You can claim the square footage that you operate your business out of your home. The rule is that you cannot use the space for something else like a bedroom or a den or something. It needs to be a dedicated space for your office. Keeping in mind the IRS is probably not going to come down and measure the square footage of your office. So it's to your discretion. But like I have a dedicated room, it's actually right behind me on the other side of that wall, that is a bedroom that we turned into our home office. I claim that square footage. That percentage of my house I can also claim off. If I have rent or mortgage, then I can write off the percentage of that. So say my house is 1,000 square feet and I use 200 square feet for my office. So that is 20% of my mortgage that I can claim. That's 20% of my insurance, my utilities, repairs, yada yada, because my home functions also as my business space.
Does that work for somebody that's renting?
Yes. Bart asked if it works for someone that's renting. Yes. You can do it as a renter too, not just an owner. So if you rent your place and you have a bedroom dedicated or a spot in your house dedicated that's just for your business, measure it out, take that percentage of your square footage and write off all the things that you spend to make your house function, like turning the lights on, the water on, be able to flush the toilet, whatever you need to do, just as if you had to go rent an office space to function. Shipping, Cassandra asked, shipping credits should go under gifts? No. Shipping credits. Yes. Yeah, they would go under gifts as well, up to $25 per person. Yes. Typically, you're not going to give a $25 shipping credit, but you can credit back their shipping, to that. You can also, depending on how you line item it out, you could run it as a promotion. So like anyone who signs up in the month of whatever will get $8 on their account as a promotion. You can put it under promotions. This is kind of a gray area, I guess. Depends on where you want to put it. The truth is that all these line items are there for you to be able to categorize stuff. As long as all of this falls under an expense, you've got it in the right spot. Nicole asked, I was under the impression that it had to be 300 square feet or more. No, I don't believe so. At least that's when I asked Amy Colgan's dad if there was a minimum square footage. He said no, but I can double check that for you. I will ask. Does any remodeling to the house or just that room count? Just the room. So if you had to buy furniture, if you had to put shelves up, if you had to put lighting in, anything to make that space work for your office, that would count. Those expenses would count. But if you just remodeled your kitchen, but your office is in another bedroom, that doesn't count. So, things like that. You could get really, it depends on how, technical you want to get, but, if your business is its own business entity, which I highly recommend, and we'll get into that in a minute, and you want to rent your living room or your kitchen for a class to your business, you could do that. But then you would also have to claim that income that you made off of renting it to yourself on your taxes. So it might not even be worth it, just depending on the tax percentages. So I probably wouldn't worry about using my home for business purposes outside of my office that I claim. Okay. So other things, insurance. If you have to purchase any business insurance or anything else, I don't typically carry general liability or anything like that for my Young Living business, because Young Living handles all of their own insurances, and people aren't typically buying things directly from me. They're buying it through their own account through Young Living. And so I'm protected because all I am is an independent distributor for them. This is one of the fantastic benefits of having a network marketing business, is that you don't have to inventory your own product. You don't have to sell it. You don't have to collect all of the sales tax or anything like that. Everything goes through their own Young Living account. This is why people that will offer to sell oils through their account to someone, so say they're not ready to sign up yet, but they really want to try lavender, and you have them pay for the lavender, make sure that they're paying at least what you're paying for it plus 10% to cover keeping track of it all and your time. Plus, that's also policies and procedures. You don't want to sell anything less than what you're paying for it. You want to mark it up just a little bit. But this is why it's not a super great idea to continue allowing people to purchase through you over and over and over again, because it puts more liability on you to keep track of it and to claim it and all that. It's just so much easier if you encourage people to get their own account. Just like you did, you saw the benefit in that in it for you. You can share the benefit of them getting their own account just like you did. They can get all their own freebies. They can sign up for essential rewards. They can share the business with somebody else and make commissions. So it's really in your best interest and their best interest to have them get their own account. Even if it's a retail account, or even if they just start with a basic starter kit for $45, just so that they can start ordering their own oils, do that, because now you don't have to worry about all that other stuff, keeping track of it. Here and there, once every now and then is good. I think I've maybe sold like 4 oils, people purchasing through me on my account 4 times maybe in 4 years. I really promote having them have their own account, and I just tell them, look, you're gonna want it. You can order at 3 o'clock in your pajamas. You don't have to bug me. Not that they're bugging me, but like, you don't have to like, wonder when it's going to show up. They just can track everything, do everything themselves. So much easier, so much less work for you, and they'll be happier for it. Okay, legal and professional fees. So if you paid someone to help you with your taxes, if you paid someone to put your stuff into, your bookkeeping accounts, you paid an accountant, all that stuff, write off all of that. So when I do my taxes, I usually do my taxes through TurboTax, and I pay like $100, I think, to do all of my business taxes and everything through them. I write off that $100 that I spent to push all those through to the IRS. Meals and entertainment. This is the one, like if you're taking one of your girls or your members out to coffee, you are going out to dinner with your husband, but you're going to talk about business stuff together.
We never do that.
We always talk about business at least for like 5 minutes every meal. At least we can write off. I think it's 30% of all meals and entertainment. So if you're treating your team to, a team dinner, or you're going out to some kind of fun paint night, wine night, I don't know, whatever you want to do, that's your discretion. You can write up 30% of that, the meal and entertainment off. I wish it was more, but it's not. It's kind of one of those areas that they don't let you write off 100%, because then you'd be writing off every time you went to the movies and all that stuff. So just keep in mind, meals and entertainment up to 30%. I'm pretty sure that is the current percentage. Okay. Office and expenses. Again, you can write off if you had to buy a computer, a laptop, a tablet, you had to buy furniture, you had to put shelves in, a desk, you had to install a phone line, you had to install internet service. All that stuff goes under office expenses. Postage and shipping supplies. I probably spend like $1,500 a year at least on shipping and shipping supplies. So this is a big one for me. I keep track of every penny. I use a program called Endicia, ENDICIA, Endicia. Yeah, that's how I spell it. It is, it's a computer-based or app-based software that is on my computer in the other room, and I pull a spreadsheet of everyone in my downline and upload it into this program, and all of your addresses are stored. And then I can easily click on your address or click your name, and it pulls in the address, and then I can put in the weight of the package, and it prints me out this cute little label. You've probably seen them if you've got something from me. I do it through that program because it is a huge time saver for me, especially because now with over 700 people in my organization, I'm mailing things out all the time. If I have to go to the post office more than once or twice in a month, it's totally worth it. I think they charge me $15 a month, so I wouldn't probably invest in something like that until you're doing enough postage every month to pay you'd be paying yourself to go to the post office a lot. So I would definitely invest in something like that. But you have to decide where that financial investment line is for you. But that is a good one. Stamps.com is one that a lot of people use. I really love that Endicia program. So you can check it out online. And they also make it for Mac and PC. Software. So if you had to buy, like I use Adobe Illustrator and Adobe Photoshop and InDesign and all those programs to make my design stuff. If you had to buy Microsoft Word or Keynote or PowerPoint or some kind of program on your computer to be able to make class presentations, stuff like that. Or if you signed up for Canva and you pay for the Canva work edition, which is like $10 a month to make your own graphic design stuff, you can write off all of those programs and softwares. Supplies, any kind of office supplies. So if you need bins to put your pens in, and you need bins to hold your stickers and all of your make and take stuff, all of those things that either are stuff that make up an event or hold stuff for an event, you can write that off. Your cell phone. I write off 100% of my cell phone because I use my cell phone for my business. I am constantly on my phone on Facebook. My business would cease to function if I didn't use my phone for business. I very rarely actually use it for personal use, and so we put Bart's number as our personal use number. So for bills and things like that, Bart's phone has all those things go to him, and I use mine solely for business. So I write off 100% of my phone. If you don't use 100% of your phone for business and you use it for personal use, maybe like 20% of the time, then claim 80% of your bill. So if you pay $100 a month, claim $80 of that $100 every single month for 12 months off on your taxes. So keeping in mind that all of these write-offs are basically taking the amount of money that you make, your income, minus the money that the tax gives you as a standardized deduction, meaning you're maybe two spouses filing together and you've got two dependents. They give you, I think it's gone way up this year for 2018. I think it's like, it used to be $6,400. Now it's like $12,800 or something like that. They take your income minus the standardized deduction if your income was in that qualification bracket. And then you subtract all of your write-offs, and then that bottom number, what's called your adjusted gross income, means all your income minus all of your deductions and all of your write-offs. That's the number that they tax you on at that tax rate for whatever income bracket you fall into. The lower you get that number, the less money you pay in, or the more money you get back, depending on if you've paid the IRS into federal taxes all year long. You are going to get a lot of that back. If you haven't paid into it all year long, then you might owe them, but you'll owe them very little. So the smaller you get that number, the better. Okay, travel, airfare, and lodging. If you go to a convention, you go to beauty school and you have to buy a ticket, you have to drive, you have to get a hotel room. Even if you share it with somebody, you can write that off. You'd have to take, ground transportation. If you have to take an Uber, even if you have to take an Uber to get from your house to your class that you're teaching, or you're going to somebody's class to further your education and be a moral support for them, you can write that off. So that would be considered local travel. Around town, going to the store, picking up things you need for a class, going to a class, stuff like that. Utilities, electric, water, garbage, internet. So again, that kind of falls under, if you got your home office, all those things, you can write off the percentage of that square footage against those bills. And then the last one is ER and quick orders. I mentioned this kind of at the beginning. You're able to claim off 100% or $100 of every ER and quick order to ER or quick order, depending on how you want to do it. To receive all of your bonuses and commissions, because that's what the company requires. You have to have a little skin in the game. You have to be a product of the product in order to make money. And so that's what they require. Because they require that in order to make the money, you can write that off. However, if you are purchasing additional products for samples, promotions, product demonstrations, you can claim those as well under products and promotions, or advertising and promotions. So it's just a different line item. So I'll just take my $1,200 that I can and put it under my line item for ER orders that I have to make in order to make commissions. And then I put all of my other purchases under advertising and promotions. All of my essential reward points that I gather all year long, and all the freebies that the company gives me based on my orders, those are what I use for my personal use. And that is how I write them off. My coffee cup. Oh yeah, my tea. I should probably take a sip. This reminds me of warmer tropical climates that are not going on outside. It's like 4 feet of snow outside this door. So this is reminding me that someday soon I'll get to have some warm weather. Okay. Any questions so far? This is what a 1040 form looks like. Hold this up. It's kind of a delay. I'll hold this up for a minute. You can, if you're using TurboTax, it does this for you. If you're not, you can download this form on the IRS website and do it yourself. Basically, all of your, the money that you are writing off is going to go on line 12 of your 1040 form. And it's going to, if you do it through TurboTax, it's automatically going to fill all this out on a Schedule C for you. And that, whatever that number is on that form is going to go in line 12. So you're going to have all your income, all of your losses, and then your adjusted gross income is going to be on line 37. That's the number that the IRS actually taxes you at. So the lower that number is, the better. Okay? Anything you have questions on, feel free to ask me. Some good oils while you might be coming up and typing your questions out. If all of this scares the bejesus out of you, put on some Trauma Life and some Stress Away before you start your taxes. Stress Away is always a good idea. If you want to get through them quickly, Headache Free Envision's a great one. It helps me get through some tasks that might be a little bit more complicated. Also love Clarity. Helps give my mind a little bit of a boost. Also Brain Power, if you have that one, is a great one. Gratitude. Put on some gratitude and abundance. These two go hand in hand. In order to have abundance, you need to have gratitude. They work together. So I often will wear these together. Be grateful for all the money you're making that you get to do taxes on, and all of the things that you are investing in your life and your health and wellness and those around you, because it's going to pay off big, big, big. And put on all the abundance. We want to attract all kinds of financial and wellness abundance. Some other great ones, Common Sense. If you don't know if you should spend that money on that thing, or if you should write it off or whatever, put on some Common Sense. It's a great one. And if you're just still stressed out and scared, you can put on some Peace and Calming. These are some great options. These are my oily tax oil suggestions. Okay, any questions here? So Crystal, do you have an expense sheet, like a chart of accounts cheat sheet? This backside of this cheat sheet, it would be a chart of accounts. It's pretty much lined out exactly as your chart of accounts would be. If you're using like QuickBooks, Quicken, Wave, W-A-V-E, Wave is a free online accounting software that keeps track of all your income and expenses, and it even links up to your bank account. That's what I'm using this year for the first time to keep track of all this. I used QuickBooks in the past, but I think it's just way more than what my business needs. And so I'm going to Wave. It's a much simpler process, and Bart's going to start helping me with that. So I wanted something really simple and easy for us both to be able to understand and operate. And it's absolutely 100% free. And within Wave, they already have these chart of accounts set up, and you can modify the names and everything and where you want your money to go when you're documenting it.
I would, you talked about a little bit in the beginning about why people would want to go to all the trouble of doing this, but maybe go over that again. I know for some personality types, taxes, they don't want to face that at all. So how important is it as a Young Living member that they focus on this, and why?
So like I said at the beginning, you don't have to make a ton of money to have this work for you. I apologize for my crying kid in the background. You can make one commission check. You can make $50 off of one person signing up. If you are actively pursuing building a business, meaning you are sharing with people, you are giving out samples, this is not a hobby. This is actually something you're serious about doing. It doesn't have to be full-time. It can be extremely part-time. It could be an hour a week that you invest. It doesn't matter. As long as you're actively sharing and building a business and you're trying to sign someone up, you can write off all of these things. People think, I think, that you have to make a bunch of money before this matters. It absolutely doesn't. In fact, you want to show that you made no money. You want to show that you put it all back into your business. You invested it back. As you rank up, you are inevitably going to make way more money than you spend because the commission checks are they grow so exponentially that, you know, as a diamond or a crown diamond, you're making $30,000 a month. You're not spending $30,000 a month to grow your business. There's just no way that you would need to ever spend that amount of money. So you're going to have to get creative in other ways. You're going to have to invest in property. You're going to have to invest in other business opportunities. You're going to have to do other things with your money at that point. But from starting out to getting your starter kit to the time that you hit income of those levels, you take every single write-off you can. The government is not going to penalize you for making a loss at the end of the year. What they flag, and a lot of people, I think Crystal asked me this the other day. What if last year I took a loss for $7,000? I lost $7,000 and I'm negative. And then this year I show I'm lost $8,000. That's not a very big difference. That's $1,000 in the IRS mind. That's like nothing. If you go from one year from losing $7,000 and the next year you lost $50,000, that's a huge jump of loss. You better have your documentation for that. That doesn't mean you shouldn't take those losses, but make sure you have your receipts. So every time you swipe your card, you spend something to grow your business, whether it be a sample or whatever, or to teach yourself about a product, you keep that receipt. Put it in a shoebox, scan it on your phone and put it in Dropbox, whatever works for you. Keep track of all of those. It's always worth it. Like I said at the beginning, Amy's dad, who is a CPA, extremely good at what he does, had one gal in her organization sign up one person, and he got her $5,000 back from all the write-offs because she was actively attending classes, she was supporting her member, she was learning and growing and teaching herself about oils. All those things make your business not a hobby, but an actual business. Okay. So Tammy. Okay, so I'll post this cheat sheet. I'm going to post it as a PDF that you can print off. It has everything you need on it. Let's see. A couple other questions. Tammy, I'm going to need to do a better record keeping as my teen grows. Yes. It's never too late to start. You know, it's already February, I understand, but, you know, go back through your bank account and line item things out that you know are business expenses, highlight your bank statements, and then from here on out, going forward, keep your receipts. Typically, the IRS is not going to really request receipts that are under $75, but it's a really good idea to keep all of your receipts and just keep them in a big box so you have them. If you're doing your tax spot throughout the year and you're logging those things in, or you're doing your Dropbox, there's tons of apps too. If you go to the App Store and look at like small business tax apps, there's tons of things. Find one that works for you. Clarify. Okay, Shannon says, clarify a little slower about the part about oil purchases and write-offs. Okay, so to go back really quick to clarify on the essential reward.
Real slow.
Really slow. I'm going to do this real slow. Sorry, I talk fast sometimes, guys. I'm sorry. Okay, so the company requires that you spend 100 PV, that's $100 before tax and shipping, right? In order to make all of the bonuses and commissions owed to you. Because the company requires you to invest every month, the IRS says you can write off those purchases. So at the end of the year, what I do is I go through my account and I go to my orders, which are under, if you go log into your virtual office on the left, be your left, under my account, click on that. Under that will be my orders. Click on my orders and they'll all show. You can click into each one of those. I don't do the orders that I claim for my free points. Those don't count. That's my personal use. I don't write those off. All of my essential reward purchases and all of my quick orders, outside of my quick orders that I use for my free points, I total that whole amount up, whatever that number is. I take $1,200 of that because $100 I have to spend times 12 plus tax and shipping, so it's going to be more like probably $1,600. That goes under the commissions. There's a line item for things for commissions on TurboTax. I'll have to look up what it's actually called. That's where I put that amount of money. Everything else from that bottom line of what I've spent for the whole year goes under advertising and promotion. I just split it up and line item it out that way. Does that make sense? So that's how I'm able to write off all of my purchases, because I use my points and all of the free product that Young Living sends me in my box for all my orders automatically as my personal use products. Okay? If you have any questions about that, Shannon, again, please don't hesitate to ask. I'll try to explain it a different way. Crystal says, so she keeps a cheat sheet on her wall, and before the receipt goes into the tax spot, I write it as an expense line item name on the receipt first. That way, yeah. So I do that too. So if I'm at a restaurant and I get my receipt that I sign and leave the restaurant, I take the line item one that has all like the food and whatever we've spent, and I write, business meeting with who I was and maybe a little note about what we talked about or something. And I just jot it on the receipt. If I get gas in my car, I write gas for going to class, da 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 da. Or if I bought something at the grocery store that was for making things for an event, I'll just write on there for what event it was, so I can jog my memory at the end of the year. Or if you're really super organized and green, I'm like negative green personality type. I should do that month to month. So I'm gonna have Bart start doing that for me a little bit.
Goody.
How long do you hang on to your receipts and taxes? Technically, the IRS recommends 7 years. But yeah, 3 years, Crystal says. Yeah, usually 3 years. Like, I'm about ready to throw all my stuff for 2014 away from starting this business.
It's becoming less of an issue with digital methods of keeping track of stuff. I mean, why toss it if it's taking up digital space and not real space?
I don't know if you can hear him. So if it's a digital thing, like it's in a Dropbox account, you get a really big Dropbox account for free. You can keep a ton of receipts in there for years. It's up to you personally. I usually keep them for a few years, and if I don't have the IRS come and want to do any adjustments, which they've never really done that for any of my business write-offs, if it's gone like 2 or 3 years and I've filed subsequent tax years and they've never had any adjustments, and then I toss them. So, Kathy asks, what if you haven't signed anyone up yet? That's okay. Keep track of all of your expenses anyway, because I'm sure between now and the end of the year, you're going to sign somebody up. You're going to make something. Even if you don't sign anybody up, although I find it hard if you're actively giving samples out and you're actively hosting classes and you're actively putting any kind of time, even if it's an hour a week into your business, that you're not going to sign someone up. But if that happens, which is possible, still keep track of it, because you don't have to make money in order to have write-offs. That is the greatest part about all this, is that all of these tax laws are meant to benefit business owners, small business owners like yourself, from having to pay a ton of taxes in a year. So you might as well take advantage of it. We pay enough in taxes as it is. I think the tax rate currently is like over 30, it's like 40% or something. I was reading like a history of taxes today. We, at the highest during the Great Depression, we were taxed at 97%. Isn't that insane? When the taxes first, it was Abraham Lincoln that created the very first tax laws, and it was 3%. 3% of your income was taxes, and now it's like, I think the new Trump administration, the highest tax bracket you would pay is 37%, and that's if you made over $600,000 a year. But the new tax law is like, it's basically, I get an extra $3,000 back this year based on Trump's new tax laws. So there is some benefits to you. And your paycheck will go up if you, I think on average, a person's going to see between $50 to $100 extra on each paycheck due to the taxes going down. So you'll pay into your federal taxes a little less all year long this year. Yeah, so Jill says you can be audited up to 7 years. So 7 years is the IRS's recommendation for keeping all of your receipts and stuff. So it just, that's a good idea. You should probably do that. That's totally up to you though. So Just get a box and put it up in the attic or something. Honestly, though, I'll tell you this. Most of the receipts don't last more than 6 months. Like, I'll pull out a box of receipts and half of them will be blank because the ink is worn off. The heat process that makes the thing even work to begin with is all gone, so you can't even read it. So it really is best if you just snap a picture on your phone and upload it to Dropbox, and then you don't have to keep boxes of receipts around. Okay, I have talked your ears off for like an hour, and I promised you this would be an hour. So if you have any last minute questions, please don't hesitate to ask. I'll be posting, I'm gonna actually go through all these questions and post an additional facts frequently asked questions page that goes with the 2 that I put up already. And I hope this gives you a little bit better idea of where to begin on what you can claim and keeping track of everything. And I want you to get a bunch of money back at the end of the year. And at least, if nothing else, not pay a bunch of money at the end of the year. So keep track of all those write-offs and sign up your grandma, somebody, one person. It will be super helpful to you and save you tons and tons and tons of money. Thank you, Tammy. Thanks, Nicole. Thanks, Jill. Thanks, Kathy. Thanks, Crystal. Thanks, Shannon. Thank you, Carrie.
Thank you, Bart.
Thank you, Cassandra. And if I didn't say your name, Debbie, Steve. Who else is here? Amy Garcia, Casey. All of you lovely people, thanks so much for being here tonight and taking your Sunday evening to listen to me chat for an hour. I love you all, and I hope that you will reach out to me with any additional questions you have, and that this will benefit you greatly in your pocketbook. All right, talk to you later. Love you. Bye.